Episode 5 of the boot camp. This is the most important video you're going to watch in the whole boot camp, so make sure to take notes. In the previous video, I talked about how you're transitioning over from a beginner to an intermediate trader now. This is where we start to get spicy with things. This is where you are going to learn the key to everything. If you are an advanced trader, if you're a beginner trader, this is what opens up doors, and that's factoring in time. Time. Star this video, share this video, write it down, rewatch it a million times because this is the best video that you are going to watch. Now, I want to talk a little bit about macros because macros is... First, let's talk about what is a macro. A macro is the first and last 10 minutes of every single hour where price tends to get volatile. Now, what happens when price gets volatile? Manipulation. What is manipulation? It's when price, let's say we're bearish, price will move up higher to trigger people to going into longs so then they can drive price lower, tricking you, right? So when you want to find a fill into your entry, if you're looking for shorts and you want to see price trade up into your fair value gap, what is happening there? Manipulation. So why do you trade macros? Because the highest probability times where manipulation is going to happen is during a macro. Because that's where the banks add in more positions to make price action more volatile. Now, keep in mind these macros that I've noted out, the key macros, these are the only macros that you're going to need. It's nice to know the other ones, but you don't need them. 950 to 1010, the number one, the star macro. Write down in your journal, star 950 to 1010, opening range macro. That's what this is called, the opening range macro. This is the best, the bread and butter, the number one macro and the number one thing you are going to need to become a profitable trader. And if you are in my community, if you're in the lines, then you already know how to trade this to the teeth and you should find success already trading this macro. There's the 1150 to 1210 macro, which is the lunch hour macro. ICT talks a lot about this macro. It is a pretty high probability macro. A lot of people like it. I personally don't trade at that time, so I completely ignore it. Then there's the power hour, which is the power hour macros. It's 1550 to 1610 and then 1650 to 7 because the market closes, or 17 because the market closes at 5 p.m. So the power hour is good for PM traders. It is a good macro for people that like to trade PM session. I don't trade PM session, but it has a lot of volatility. If price action did not yet meet the draw on liquidity of the day, it will happen during this hour. A lot of volatility can be applied into the markets if we have not hit our draw on liquidity. Now I want to go to key times in the days. 8:30 is the pre-market open. 8:30. 9:30 is market open, equities open. Keyest time frame is 9:30, and this whole range is 9:30. That is what you need. 8:30 is for narrative. 9:30 is for narrative. 10 a.m. is for narrative. 10:30 is for narrative. These key times are for kind of looking at to wait for the markets to say, hey, look at what I'm doing at this time. You should take the hint. It's basically like you're shooting your shot or you're talking to a girl and she gives you a hint that she's interested in you, right? The market is giving you a hint that it's going to move higher or lower at these times. Now, the confirmation will happen in the macros. The hints will happen in the key times. So, what do I mean by that? Let me put it back into terms of women. The hint might be, while she's talking with you, she'll twirl her hair. But the confirmation will be her physically speaking out and saying, I have feelings for you. That's your macros, is that I have feelings for you. The key times is the twirling your hair to give you confidence for when the macro comes, you're going to take it, right? The hint gives you confidence for when the verbal word comes out from her, she's not messing with you, and she actually has feelings. Cool comparison, but I hope that helped you actually understand what these key timeframes and macros are, is that the key time should give you confirmation and should hint you into saying, listen, we're bearish. This is what I'm doing. Wait for the macro because get ready. You're going to get a trade. The macro is where you find your setup. Now, write this down. Take a screenshot. Put this in your journal because this is the bread. This is the number one thing you need in trading is these times. It's time. Time is what makes you a profitable trader. What transitions your trading into normal traders to profitable traders. So let's go and look at an example of the Friday, the most recent day. You can see, and this is a break of structure example. You can see that price at 9:30, what did we do? Right? So you get on the markets. You're like, okay, first thing you're doing is what did 9:30 do? 9:30 is driving us higher. And now 9:30, I'm not just talking about the exact candle at 9:30, the 9:30 opening range. So that's 9:30 to 10 a.m. is a 30-minute window of where price is going to show something. If that's a first presented fair value gap, if that's taking a draw on liquidity, whatever. I like to look at it as 9:30 to 9:45 is the window of storytelling, of the window of this is what we're going to do. So what does I was just making sure my microphone's on. Yes, it is. What did 9:30 do? We traded up higher. What did we do when we traded up higher? Took internal range liquidity. Remember my liquidity video? Internal versus external? Boom, right off of the bat. What did 9:30 do? 9:30, that window, 9:30 to 9:45, adds in volatility. Because volatility came into the markets, what happened? We went the opposite direction. Manipulation. We traded into the 5-minute fair value gap, which is this right here. Look how fast it does that, right? That is institutional order flow. Look at this. Boom, boom, straight down. Super strong order block. That order block got traded into here. You could take an order block trade there if you like order blocks. For me personally, no. Now, what did 9:45 do? Which is an extended macro. I'll get into that a little bit later. But we have a failure swing. When I talked about break of structures for market structure shifts, what is this? Look at our current profile. We're bearish. We've been bearish for a while. So we don't need a market structure shift. A failure swing, which shows that price is too weak to break this high. So then we displace down lower. Breaking structure. Break of structure. Price broke structure right here. So what is happening? We confirmed bearish. 9:30 manipulated. Boom. There's your narrative. There's your key time. There's your hint. The girl's interested. She twirled her hair. Now is her shot. She formed that fair value gap. And you're going to take your entry. Break of structure. What happens here? First presented fair value gap. At what time? Look right there. Do you see right there? 9:52. And this isn't just one example. I will show you every day where this happens. 9:52, that fair value gap's formed. What time do we get into it? 9:54. 9:50 to 10:10. What time do we leave the fair value gap for the last time? 10:03. We're still in that macro. And we continue all the way down to relative equal lows and even lower. That was my draw on liquidity. So you can see right here, price action, traded higher at 9:30, took a form of liquidity. And when I say took a form of liquidity, I'm not talking about just highs or lows, internal range as well. What did it do here? It took a form of liquidity, right? There's a fair value gap. 9:30, manipulated. 9:50, traded into your setup. You need to detach entry models to trading models. The number one mistake traders make is they get into trading and they make an entry model and think that's their trading model. That is wrong. Your entry model is this pattern right here. This break of structure, fair value up, whatever. That's your entry model. This does not work unless it's factored in this time window with narrative, time narrative. Okay? I wrote down in my journal. I'm trying to find it. But the number one thing that you need to be trading is time-based delivery. ICT says this all the time. Time-based delivery. This whole delivery is based off of time. Now let's look at what time do we break that low? What time do we break those equal lows? What time is that? 12. On the dot. It's all algorithmically coded, guys. It's all algorithmically, is that how you say it? It's all coded, all right? The market makers will make things happen so smart money can get into trades before driving price lower. A lot of people here were anticipating this fair value gap to get filled, but it didn't. One, it showed signs of not trading past consequent encroachment, so that's an indication. I pointed that out in my fair value gap video, but it also traded into the first presented fair value gap, 952. Right? You jump up a time frame. Where did I go? Into the 3 minute. What do we have here? Breakaway gap. Go to the 5 minute. What do we have here? There's your internal range liquidity, that failure swing. Look at the bodies. Look at the bodies. The whole time, 5, 10, 15, 20. You had 20 minutes to realize that we were consolidating under this BPR. Here's where we go crazy. All right? What is this? A BPR, balanced price range. An inversion fair value gap, remember my fair value gap video, and a regular fair value gap. A BPR is when price forms a fair value gap, also forming a inversion fair value gap. This is institutional order flow. Why? High, low, higher high, lower low. Market structure shift. What's in a market structure shift? This is going to be really hard to know, guys, if you're a beginner, so write it down, rewatch it. What's in this market structure shift? A BPR. When a BPR, balanced price range, is in a market structure shift, it should be treated as institutional order flow entry drill. What is that? When the body should not trade into the fair value gap, only the wick. Look at what happens here. Wick, wick, and it leaves. Look at this order block. Trades into it, and it leaves. The BPR is only wicked into. Look how many times the bodies respect consequent encroachment of this BPR. A BPR, I'll make a video on later on explaining more about it. So if you're new, don't be worried. You might have missed that. You can come back when you watch a BPR video. But we're talking about time. So we go back here, and you saw this example of time. Now I'm going to go to the day before. All right, let's just see what happened on Thursday. Let's just open my executions so I can show you guys something really quickly here. I took this trade. Now, you can also see that I took this trade incorrectly, but don't yell at me. I closed my last position here when I should have held it on. Look at what happens here. Again, guys, pay attention. All right? Yes, 930 manipulated higher. Cool. But we were already pretty low in the day, and we took Asian lows. So this is where narrative comes into play. All right? No matter what happens on the lower time frame, with time, with whatever, if your higher time frame is wrong, you're not going to win. If your narrative is wrong. My narrative was that we're bullish. We already took these Asian lows. At what time did we take those Asian lows? 930. 930 to 945 window. Boom. Again, manipulation that took sell side. Look at this, okay? I'll draw it out for you. Look at that. 932 to 945, we took 930 to 945, we took liquidity. So there's your manipulation. What happens here? What did we do here? We broke structure, right? What is this? A failure swing to that low. So that's a break of structure. What did we do here? We trade into this fair value gap. At what time? 953. 953. The 950 to 1010 macro. This is the day before. Here's proof of me taking these entries. I went 5 contracts in here. Mini contracts. When did I take off majority of my contracts? 4. At the high 930 created. News data highs. What is this? 2RR. That's simple. I wanted to target these equal highs, but I didn't like how we took so long in this fair value gap, so I ended up closing. I could have held it on because as soon as I closed, we actually went up higher, but it's okay. Look at this. I'm going to turn off my executions again. Look at this candle. And then back to my fair value gap video. Let's measure it out. What's that? Consequent encroachment. What does the wick do? It doesn't touch it. It doesn't trade past it, I mean. What does the body do? It respects it. And then it continues up higher. At what time? During the macro, guys. Let's look at another example. You want to see another example of Wednesday? This is, again, we have Friday, we have Thursday, we have Wednesday. What happens here? All right? high, low, higher high, lower low. Market structure shift. Right? Let's go into replay mode here. Okay. Look at the 3 minute. Look at what it trades into. Order block, fair value gap. So our narrative is already bearish. Okay. Let's see what the 2 minute. I have not looked at this prior to this video, by the way, guys. All right. You have a bunch of fair value gaps. The main indication was this order block up here. What happens, right? What is this? High, low, higher high, lower low. Market structure shift. What does price action do? Price break structure, but what did 930 do? 930 manipulated higher. Bang. There you go. There's your narrative. The hint. I'm interested in you. You should go short. You're bearish. Let me finish. Let me give you your confirmation at 950 or 945 extended macro, and then take this setup. 930 to 945 manipulated higher. Now, this is where more in-depth analysis comes. What is a breaker block? A breaker block, I'll show you an example of it, but I'll do a whole video of it. If you already know, it's the candle of the low formed in a market structure shift, or the high. Let's mark this breaker out. High, low, higher, high, lower, low. Look at mean threshold. See this line? That's the middle of the breaker. Look at the body. See how it trades into it and it respects it? It stays below mean threshold. Now let's look even closer. What time does price trade into and away? Right? Look at this. 9:45 exactly. Price action trades all the way up here and then trades all the way down here. That's at the 9:45 extended macro. Now let me go in depth on extended macros. Extended macros are 5 minutes longer. So the first 15 minutes and the last 15 minutes of every hour. What are extended macros used for? Well, if we're in a very bearish or bullish profile, you want to anticipate that the first presented setup is in that window, is in that 9:30 to 10 a.m. window. So for higher confirmation, again, this is only if you're in very bullish or bearish scenarios, you can extend your macro to 9:45 or 10:15 or any other hour. This is what we did here. Now, I bet you on ES, there was a fair value gap here, right? But we are super bearish. We continue down way lower. But what time did we trade into this fair value gap? See this 5 minute? See this? Let's mark it out. What happens here? Let me go back into replay here. What happens here? Consequent encroachment is respected. At what time did we go from down here to all the way up here? Breaking these highs, breaking internal range liquidity, and respecting this fair value gap at 9:30. Guys, every single day, it's time then price. So I want you guys to do your homework and go back in the charts and find your ideal setup. If that's remember your draw on liquidity, not draw on liquidity. Remember what I made in that video prior to this, the market structure shift and break of structure, how you need to have your narrative, how you need to find a draw on liquidity, and then your setup. What is this? Buy stops, ran, right? Buys, ran. Buy side taken, all right? What happens after? We manipulate. This is my setup. This is called the time setup. The 9:30 Judas setup. Judas swing. 9:30 to 10 a.m. manipulates. We get our entry over here. So this setup only works because it's factored into this time. If you find the setup somewhere else, it might not work. Now, if you trade market structure shift fair value gaps, it probably doesn't work anywhere else. You probably have a problem with seeing that setup form and it not work. And that's because you're using it at the wrong time with the wrong narrative. I'm telling you guys, wait for 9:50 to 10:10 to form your setup. I'm going to give you the blueprint to getting your first payout. If you haven't gotten your first payout, or if you only get a few payouts every year, here's the blueprint. Ready? 1 trade a day. Up your risk a little bit more because you're doing 1 trade a day. Only look for a trade from 9:30 to 10:10. If you don't get a setup at that time, or 10:15, 9:30 to 10:15. Don't look for a setup at 9:30. Sorry, 9:45 to 10:15 is the only time in the day that you should find a setup. If you don't, get off the charts. So you need to get on the charts at 9 a.m. Read price action for 30 minutes. Use 9:30 as a narrative storyteller. Use 9:45 to 10:15 to sit up and get ready to hunt for your setup. If you don't find it, you're done. If you do find it, catch it, you're done. 1 trade a day no matter what. If you go against your model, you're off no matter what. This helps you get rid of FOMO, get rid of the psychology aspects of trading, because you're limited to 1 trade. You won't overtrade because it's 1 trade. That's it. 9:50 to 10:10. Couple these. Write this in your journal, all right? Write this in your journal. This is going to go crazy. I'm going to spit so many facts here, so slow it down if I speak too fast, all right? Get your pen. Here we go. At 9:50 to 10:10, if you see a fair value gap that is in the right narrative direction, traded to, and consequent encroachment is respected, that fair value gap will work 80% of the time. Consequent encroachment needs to be respected. At 9:50 to 10:10 macro, if you see price trade into a fair value gap and respect consequent encroachment, there is your entry. Now we need the confirmation. Here we go. Again, clip this, save this into whatever, and watch it a million times. 9:30 needs to manipulate. It needs to take some sort of liquidity, either external or internal range liquidity. Once that happens, like it did here, you need to see a break of structure to confirm that you're done the manipulation, right? You see how we broke structure here to confirm that we're done moving higher? The failure swing showed us that we're done and we're not going to go higher than here. So no matter what, if you wanted a more conservative stop loss, no matter what, we would not trade to this high. If we did, we are going up way higher. So wait for a break of structure for 9:30 to be done its manipulation. Then, in that break of structure, look for a fair value gap. Once you find it, look at the time. If you see price trade into that fair value gap at 9:50 to 10:10, you found yourself a setup that will work. That's it. 1 trade a day. 1 trade a day. 1 setup. 1 narrative. 9:30 manipulates. 9:50 forms your setup. That's it. You're out. Use all the logic that I've taught in my previous boot camps. Apply it to time. Okay? Apply it to time. I'm going to go back. Actually, I deleted that. Never mind. I'm not going to go back because I deleted it. I hope you took a screenshot, but go back in the video of the times that I showed you, the key times. Because it can be used for not just 9:50 to 10:10. If you can't trade this, there's other time frames that you can do that with. Now, this works best, but remember, it's narrative first. So if you have CPI, if you have news drives at 8:30, you can use 8:30 as 9:30. And 8:30 can manipulate. Then 9:30 can continue, but you'll still always get your setup at 9:50 to 10:10. One thing about macros versus key times is key times may change, right? 9:30 might not manipulate. It might do it at 8:30. Because there might be news at 8:30. They might do it at 10 because 10 might have 10 a.m. consumer sentiment, right? There might be different news times. So that's the hard part, is finding the right storyteller. But 9:50 to 10:10, you're only looking for the same thing. If it doesn't show up, then you don't have an entry. If it does show up, you have an entry. Because you should already know your narrative at this time. 9:50 to 10:10 will enter into a fair value gap, respect consequent encroachment, and then move down lower. And if you want proof of this not just being 1 day, here's literally the day before. 9:30 manipulated. We broke structure, failure swing, telling us that we're not going back down there. What happened here? Price traded into this fair value gap, respecting consequent encroachment. Bodies respected it. We continued back higher. All the way up here. That is macros, guys. That is time. Time-based delivery. That is it, guys, for my most important bootcamp video. But again, remember, there's going to be more in-depth videos. This is just number one. If you thought this was complex, wait until we got more bootcamp videos. If you did not understand this, rewatch the whole video again and take notes. Price moves algorithmically at specific times in the day only. Remember that. Do not take a setup that randomly forms. You need time. You need time first, and you don't need to be 950 to 1010. I'm saying that because that's the highest probability. You can use 850 to 910. Remember all those other macros. You just need two types of time. A storyteller and an entry. Think of it as sales, okay? A sales development representative and an account executive. A lead maker and a lead closer. 9:30, 8:30, 10 a.m., whatever is the new drive, whatever is the narrative, is generating your lead. The macros is closing your lead. And then your take profit is obviously getting the cash from your lead. Guys, I'm telling you now, this is the number one thing you need in trading is macros and time frames. Rewatch this video so much. Couple your entry model. You need to find an entry model that works for you. The entry model is 10% of trading, guys. I'm telling you this with all honesty. 10% of your trading is your entry model. The reason why you're not catching profitable trades, the reason why your entry model isn't working that well is not because the entry is bad. It's because your narrative reading is bad. The ICT 2022 mentorship entry model, what I showed you in the previous videos, the market structure shift and the break of structure fair value gap, is a profitable model. That works. You have your entry model. There it is. Market structure shift, fair value gap, or break of structure, fair value gap. That's all you need. Everything else is being able to read narrative, read price at a set. And how do you do that? Watch what happens at specific times in the day. That's it. That's everything you need. You officially have everything you need to be profitable. It's up to you to follow it. Rewatch this video, study macros. I'm going to be uploading way more videos about macros in depth, but this is video number one. Congratulations, you made it past the hard part. Now we're going to learn about everything, and you are about to become a successful trader. I'll see you guys in the next bootcamp video. Thank you guys for watching, and I hope you found this useful. Until next time, I'll see you guys later.